Good afternoon, and welcome to the end of week market review for Friday, May 24th, 2013. We can see both our US and Canadian markets are declining bullish. Our agenda today is to cover off a few things, starting off with the market news and where we are compared to yesterday. We'll even be looking at some of our charts compared to last week. We're going to then look at some economic reports and then look at some technical analysis. While we're doing that, we're going to be looking at both the S&P 500 as well as the Toronto Stock Exchange. And then we'll be looking at daily and weekly charts, both short-term and long-term. We're then going to go ahead and take a look at our volatility indicator. And finally, one of our great picks. So we can see that the S&P 500 did close down for its third trading day, which ended up pushing it down into a loss for the week. Now the Dow Jones ended up with a slight gain. Unfortunately, though, it is still down for the week. All in all, the Dow Jones is down 0.33%, with the S&P 500 down 1.07%. Now if we look at that, we can see that although 1.07% is definitely a loss, we are able to see daily gains in that average quite a few times for the S&P 500. So yes, we've definitely had a little bit of a decline, but when you look at the big picture, especially when you look at the daily chart in a little bit here, you'll see that there really hasn't been too much of a pullback. Alright, so we've got oil down 0.40% from yesterday. This is putting it to $93.87 per barrel. We have silver down 0.78% from yesterday. This puts it to $23.34 per ounce. We have gold down 0.45% from yesterday. This puts it to $1,385.50 per ounce. And then finally, we have our US Canadian pair, which is up 0.03% from yesterday. This puts it to 1.0310 pips. Looking at our economic report, the one that we really like to look for is the jobless reports. We know that they are expecting 350,000, and we actually end up with 340,000. So we had a lower than expected jobless report, which is definitely great. It helps that the markets didn't tumble this week. But obviously because of some other concerns in the market, mainly just being overbought, we do end up seeing a little bit of a decline here. So what we've got here is the S&P 500. We're looking at a daily chart, and the line that we really want to make focus to is this line right here, this straight red line, which is rising trend line resistance. Now this trend line resistance did end up acting like support on the way down, but by Friday you can see that we closed down below it, and we're now finding this as resistance. So we do have some resistance at 1650, but knowing that the resistance line here is rising, you're going to see that it's not going to act like it's very good resistance at all. It'll definitely end up being good support, but we are going to be concerned with this just for a little bit here. The S&P 500's MACD, though, is declining bullish, and with the black line definitely below the blue line. So we need to be very, very aware of the fact that the MACD is declining, and until we see some leveling out, we really should be careful with our trading decisions here. Looking at the S&P 500 on the weekly chart, right now we're looking at about 5 years worth of data, and you can see that each of these candles represents a week. What we have here is definitely a red candle showing that we're down for the week, but you can see that we still did end up having some gains where we came near 1700. So we're going to really look at this and look at the past here and say, you know what, it's about time that this is happening. It's about time that we're starting to see some declines, but this doesn't mean that this is the end of the world. If it continues to follow suit, you're going to see that it's going to come down, find some support here at the 40 EMA, where it'll then work itself back up again and into highs like none other. It would be really quite exciting to see the S&P 500 work itself past the 1700 and maybe even into 2000. To really help finish putting things into perspective here, we've gone right back to about 2002, and you can see that there's just been a tremendous amount of growth, and we really have not been this high in quite a while. So definitely some great times right now. Definitely makes you think that it's very possible that we'll work ourselves up to 2000 in the next couple of months. Definitely that'll be something that I've never seen or expected to see in my trading career. So it'll be a great memorial time for all of us, or memorable time, for all of us, if we see that happen. But even if we don't make it that high, there'll be plenty of buying opportunities, plenty of trading opportunities until then. Alright, so here we are looking at the Toronto Stock Exchange. You can see some overhead resistance here. Nothing to be too concerned about until about 12,900, especially since the trading is very flat. Now, we are looking for some support at around 12,520, which happens to be the 22 EMA. And we've got the MACD declining bullish, but with the black line still barely above the blue line. So this is looking a little bit stronger than the S&P 500 is. Alright, here's the TSX on its weekly chart. You can see that it's actually closed up for the week. Definitely not nearly as high as where it was at the beginning of the week. But all in all, considering the markets are starting to decline, this isn't too bad at all. This means that we've had 5 weeks of gains. And all in all, the TSX is looking pretty good. Now obviously there is some cycle resistance just around the corner. And then we'll have some more from way back over here. If we go and we look at the big picture, looking back to 2002, you can see that we've got 2 main hurdles that we need to jump over. The first one here being around 14,300, and then the last one being just over 15,000. If we could break up above 15,000, that will be the big remarkable day for the TSX. Definitely a possibility. Alright, the volatility indicator is currently at 14.32. This means that it's just barely above its normal trading range for 2013. Now that trading range is around 12 to 14. So we're not too concerned with this at all. And in fact, the volatility indicator could go up quite a bit before we're really that concerned. I'd say the first point where we would start to show some concern is if it crosses up above the 200 EMA, which is at about 1620. We can see that it's done that 3 times on this chart already and has pulled back. So even then, it's very possible that we're just going to have a pullback. As we find some support on the S&P 500, the volatility indicator will start to flatten out and get back to its normal range. If you have any questions, feel free to either email us or phone us. Both our email address and phone number are listed on the screen. And in conclusion, make sure that whenever you're trading, you're always falling back onto your predetermined trading disciplines, never deviating away from what you've been taught. Ultimately, though, any trading decisions that you make are your own, so make sure that you're always exercising caution. This has been the end of week market review for Friday, May 24th, 2013. Ciao for now.